we're breaking down a really volatile start to the year for the economy. We're going to look at why a super confusing jobs report has everyone on edge, how the AI arms race is literally shaking up the biggest companies in the world, and, get this, why a dramatic turn of events in South America could soon change the price you pay for gas.
Okay, so here's the game plan. We'll kick things off with the market's nervous start to 2026. Then we'll dive into the three huge drivers: that perplexing jobs report, a major power struggle in big tech, and a sudden shock to the oil market. And at the end, we'll pull it all together and figure out what it all means.
You know, the first week of trading in 2026, it didn't exactly bring the fireworks some people were hoping for. Instead of a big bang, the markets kind of started with a bit of a whimper, with all the major stock indexes trending lower.
Yeah, it was a week of pullbacks pretty much across the board. Both the S&P 500 and the tech-heavy Nasdaq finished in the red. So the big question is, after such a strong finish to last year, why the sudden caution from investors? What gives?
Well, a huge piece of that puzzle came from the U.S. job market. I mean, everyone was watching for signs of its health, and the answer we got from last week's data was, well, let's just say it was complicated.
All eyes were on just a few key numbers that were supposed to give us these crucial clues about what the Federal Reserve might do next with interest rates. Is the economy cooling down too fast, or is it just enough to keep inflation under control? So first up, we saw that job openings fell to 7.1 million. Now that is the fewest available jobs we've seen since way back in September of 2024. It's a really clear sign that the once red-hot demand for workers is, for sure, continuing to cool off.
Then came the big one, the December jobs report. It showed the economy added only 50,000 new jobs. That was way below what all the analysts were expecting. And it points to a real slowdown in hiring momentum as we're kicking off the new year.
But here's where it gets really weird. Despite that weak hiring number, the unemployment rate, it actually fell to 4.4%. I mean, how is that even possible? It's a total reversal from the 4-year high we saw just 1 month ago. It's confusing. So the takeaway here is this really mixed picture. We have a low hiring market, but we also have a low firing one. I think economist Ali Jaffrey put it perfectly. There's a lack of dynamism, but it's not completely breaking down. And that right there gives the Fed a very, very tricky puzzle to solve.
So while the wider economy was sending all these mixed signals, the tech world saw a major power shift. I'm talking a new number 2 at the very top of the stock market, and it tells us a ton about where investors think the future is heading.
And the story really boils down to this. On one side, you have Alphabet, just going all in on AI with its super advanced Gemini 3 model and their own custom chips. And on the other side, you've got Apple, which, frankly, looks like it's playing catch-up while also dealing with some leadership changes.
So what's the result of this? Well, for the first time in years, Alphabet's market value shot right past Apple's, hitting roughly $3.9 trillion, making it the world's second most valuable company. That is a huge deal.
You see, this signals a massive trend in the market. It's not just about these two companies, it's about where investors are putting their money. And right now, the money is flowing to the companies seen as the clear leader in the AI revolution. That is the new bar for tech dominance.
Okay, now let's step away from the world of tech and jobs for a second. A geopolitical shockwave just ripped through the energy markets this week. And believe it or not, it could have a very direct impact on your wallet.
Things in Venezuela unfolded at just a breathtaking pace. It started back in mid-December with the U.S. naval blockade, and then it escalated really quickly in the new year with the capture of leader Nicolas Maduro, which was followed by the U.S. seizing oil tankers out at sea.
So why does this matter so much? Well, because a potential change in government could mean that U.S. sanctions are eased, and that would mean over 800,000 barrels of Venezuelan oil could come flooding back onto the market every single day. That would add to an already oversupplied market and could push global prices down, maybe even significantly.
All right, so after a really volatile week packed with economic data, corporate shakeups, and geopolitical drama, what are the most important things for you to remember? Let's connect the dots.
At the end of the day, we saw a market getting pulled in 3 completely different directions. First, you've got this big macroeconomic uncertainty from the confusing jobs data. Second, you have a corporate reordering at the very, very top, driven entirely by this race for AI supremacy. And third, this geopolitical shock that just completely changes the game for the global oil supply.
And all of this leaves us with the big, provocative question for the weeks ahead.
Facing these powerful crosscurrents, a slowing job market on one hand and the potential for way cheaper energy on the other, is the Federal Reserve going to continue its path of cutting interest rates, or will it be forced to hit the pause button and just wait? We are going to be watching very, very closely.